a lovely morning splash to start the day is great, especially when you're going to be a day trader. So today we're going to be trading in the pool. Trading by the pool. Today we're going to be reviewing Trade the Pool. So stick around and I'll tell you all about it.
Living the life, living large, Tony's in charge. He's got the knowledge, the skills, and the art. Streaming live, stock trading all day, helping people learn and make money their own way. From Wall Street to Tokyo, Tony's got the flow. Teaching the game, ain't nothing to show. He's got the charts, the trends, and the moves. Making profit, making moves is groove. Trade with Tony, he's the man. Learn from him, you'll join the winning band. Making money worldwide, it's a blast. Trade with Tony and making fortune fast.
Oh, welcome back to Day Trade with Tony, and today it's about Trade the Pool, or trading in the pool, or trade by the pool, or trade the pool or prop firm. What does that mean? Well, a proprietary trading company. So essentially, they provide the equity in a live account. So they dump up the money and get it profitable, get a nice cut of profits. So, if you speak to a wealthy individual, an entrepreneur, what they will tell you is the best way to get started or the best way to make money is with OPM. What is OPM? OPM is other people's money. So that's what prop firms do. They give you their money to trade with, and the profitable trader, there is profits right between you, the trader, and then the equity provider. So let's talk about the good, the bad, and the ugly of prop firm trading with Trade the Pool. This is my scanners, but let's go to the website and see what it's actually saying. So a stock trading prop firm with no PD. What does that actually mean? Essentially, it means that you don't have to stump up $25,000 of your own money to day trade. Well, the PDT rule is a patent day trading regulation from SEC. Basically, you must have a $25,000 equity position before you start trading that day. Otherwise, you can't day trade. You're limited on the amount of trading. Where does Trade the Pool come in? Well, Trade the Pool, you pass an evaluation, and we'll go to the actual program here. Program as second. Is on the website they have 3 programs. They actually have 4 programs, but there's a $97 one, a $300 one, $475, and I think there's $1,000 is the largest one. So the ultimate buying power. You've got mini buying powers. Essentially, they will give you $20,000 to trade with, and if you're profitable and you can buy by their rules and show consistent profitability, $97 mini buying power program, you then get funded for the same amount, $20,000. That will be a live account, and you split the proceeds, any profit. On the super buying program, there's $300 entry fee. So you pay for the evaluation and you get $80,000 of buying power. $80,000 of buying power. You have to make a profit of 4,200 based on that 8. It's a little over 5%. And then you've got extra buying power, which is a buying power of 160,000 and a profit target of 7,800. Mini buying power is only $97, buying power of 20,000 and a profit target of 80. Well, what does that mean? So the rules are that you have 45 days, calendar days that is, but approximately 30 trading days, so 6 weeks, 45 calendar days, meet the profit target. Talk about the mini buying power program here. And if you can hit that in terms of profit without going over the max loss in terms of drawdown, which as you can see is $900, then you will be given a live account of $20,000, provided that you met criteria with valuation. What is that criteria? So the criteria is you must take a minimum of 20 trades, and they have to be real trades. So you can't just get $2,000 in your first trade, and then take a number of one-share trades to make up the difference. It has to be legitimate trades. They want to see a pattern of trading behavior. They want to be able to see that you've got a strategy and that you have an edge on the market. So target is, as I say, 1800. You have 45 days to do it, a minimum of 20 trades. And each trade, each profitable trade has to have a minimum of 10 cents of profitability. So from your entry position, you have to make 10 cents. So if you buy it at $10, you can't sell at $10.09. It has to be $10.10 or more. If you sell it, even though it's profitable, it doesn't count towards your profit total. So that's one of the rules. The other rule is can't size down or exit the position within the first minute of taking them. What does that mean? It means that if you enter a position at 9 o'clock, 9 a.m., you can only size down. Of course, you can size down at 9 a.m. and 30 seconds, but that trade will then be invalidated. 10-second rule of 30-second. So these are some that I've been trading with and getting my head around. So if you're a scalper, looking for that quick breakout, a couple of seconds in, and then out for a quick profit, you have to adapt your strategy. You need to take a trade that's going to be more of a longer term breakout. And I say longer term, we're talking 60 seconds or more. So you're looking for a move of a minimum of 10 cents that's going to be sustained for over 60 seconds. So that's what the rules are. You cannot lose more than $900 in terms of the mini buying power. Super buying power is $2,100, and the extra buying power is $3,900. So that's your max loss. If you hit that max loss during evaluation, then your evaluation will be terminated and you will not be successful. In addition, if you pass the evaluation and you hit that same max loss on your live account, that live account will be liquidated and you'll have to start again and pass an evaluation again. That's another thing that you've got to bear in mind. They do put risk management in place to help you. So particularly if you're trading pre-market, that's one of the advantages of trading with this company is that you can trade pre-market. You can trade penny stocks. You can trade ETFs. Anything that you can trade on the Nasdaq and NYSE, you can trade with these guys pretty much. Long, short, great platform for that. As I say, there are a couple of downsides that I'll go into, and I've already mentioned a couple of them. But some of those rules, like there is another rule in place where maximum percentage of your overall profitability within the challenge cannot be of a single trade cannot be more than 30%. So, for example, the mini buying power, we're looking at a target 13%. 30% of 1800. What's that? 540. So that's the maximum size that you can have. Now, if you take a trade and you get $700, now that $700 can only be a maximum. You're now going to have to trade more than the $800. So that's you'll probably have to trade for $2,500, for example. So that $700 then becomes 30% of your overall profitability. That's something that you need to bear in mind during the evaluation. Once you're funded, that 30% rule goes away. So that's a big thing. But the max loss and the daily max loss are in place, or the daily pause allowance, if you will, are in play. You can pay a fine and reset the daily pause if you want to same day. But my advice is that you hit that daily pause, max daily drawdown. It's best to go with the guidelines. So that's essentially the program in a nutshell. Got 4 programs, 3 that you can get on the website. The 4th one is available in Trader Hub, and that one is for $240,000 of buying power, so almost $250,000. So the options are $20,000 buying power for $97 challenge, $80,000 buying power for $300 challenge, and $160,000 buying power for $475. It's a good way for new traders to get around the peak and day trading rule. Good way for new traders have an account and start trading, even if you start with the mini buying power, which is the $20,000 buying power account, and don't pass it, cost it. You open up your own account, it's going to cost you $100 just for platform and data fee and beyond. And the likelihood is you're going to blow up your account. You're going to lose money. If you're a new trader, right way to start off. And risking a lot less. Getting $20,000 of buying power, or the potential of $20,000 of buying power if you pass the evaluation, you're only putting up $100 of your own money. That's a good way for new traders to start off with, and I think that's great. They do have a number of different withdrawal methods. So you can have a debit card that they apply for with them. You can withdraw in crypto, or you can withdraw via Rise. You can withdraw to your bank account or wire transfer or anything like that. So there are a number of different withdrawal once you are funded. So let's have a look at the platform. The platform is Trader Evolution. It's a proprietary Trader Evolution. So I've set it up for me. You've got the level 2, currently pre-market. So does have, I've just taken the one trade, losing trade today, a $300 loss. But you can very easily change the settings. And one of the advantages of working in this is a lot of platforms don't allow you to stop pre and post market. So there are no stops. But this one allows you to put a stop limit order in place. All you've got to do is go into the settings, the general settings, trading defaults, and click this button here. Use stop limit instead of stop. Now, before the market actually opens, you go back into the settings if you want. You can carry on with the stop limit if you want. Uncheck that, and it goes back to regular stops. And that's you need to do that if you want trailing stops. Trailing stops are not pre and post market, but I'll show you how this actually does work. So, on the platform itself, on the chart itself, so we've got Wheel of Real Estate Investment here. You've got a number of hot buttons. They're not in terms of sizing. You can set up hotkeys where you can just buy and sell for sizing. You've got a number of hotkeys. The hot buttons, it's sell the ask, sell the bid, sell the market. There are a few other hot buttons that you can pause your position in entirety, reverse the position. So it's effectively whatever way if you're long, it will double the position as a sell and therefore reverse your position. Or if you're short, it will double position as a long, double as a buy, and therefore put you long position in the same way. You've got cancel, order, cancel all. You've got a number of different other, but I've just got these on right now. See here, you've got your stop limit if you want to put it, and you've got so I've just stop limits here. So it allows me to put the limit of 3 cents, for example, here, and a stop of 10 cents. I take profit of 20 cents, for example. Okay, that'll give me a 2-to-1 if I want to activate those. Okay, I've got the same on this chart. You can't actually see that just now, but I'll show that straight away. You've got some management in there right away. So let's look at NVL. This is an ETF. It tracks NVIDIA, but it's 2x the said one time, 1.5 there, but it's actually 2x. This is looking bullish. I just want to take 250 shares of this and take that stop loss of 10 cents. What's the spread? 6 cents. So probably not, but let's have a look. I'll buy the ask straight away. I've got a 20 cent take profit. I probably will get stopped out here, but you can straight away on there. You've got I've got stopped out and stop limit there, stop loss limit, and still I want to cancel that and add to the. I did know that stop loss isn't there, but I can just buy the bid. If I want to put a limit order in there to buy the bid. If it pulls back and hits that, adds to my position, then hits the stop loss. This is a fast moving. This is only a demo account, by the way, which is why I'm not getting frustrated with that loss. It's only a demo account. So as you can see, very simple. There are other ways to take a position as well. If I enable mouse trading, you can see it opens this little panel here, and you've got the day in force. So good till cancelled. Just in force for today. You've got the order type, so single order, or one cancels the other, which allows you to put orders out at the same time. You've got your sizing here. You can, for example, shares, 500 shares, whatever. Let's just do that. And what this does is allows you to right click for a sell and left click for a buy in terms of limit orders. I just want to put a stair limit in there. And the same stop loss and take profits are in there. And they've already seen that based on this particular stock, or it's an ETF, unlike, I probably get stopped out with this because of the range. See the range here is currently 22 cents. So having a stop loss at 20 cents with spread of 10 cents, the likelihood is I'm going to get stopped out on this. Don't, then fine, we may make some profit. At the moment, $20, and I need to hold on to this. This executed, and I bought into this at 902.47, and I'm currently 903.35. So I'm going to wait a little over another 10 seconds before I can actually start taking any profit. Right. They also need to move 10 cents. So at the moment, 9 cents down. Okay. So what I can then do is I can look at where we are, 8 cents up at the moment. Oh, I'm moving 8 cents. I want to see this move to that 25, and I can take that, put the order in there. Got that. Okay, so I've just added to the position, opposed to buying it. So that's my fault. Simple mistake, and then it pulled back and stopped me out. Well, it's a nice little feature that you can do on there. So of course, when you've got the limit orders, and I've put a sell limit order there, I can move my take profit in there. I can move stop losses on the chart itself. I can actually move the limit order. So if I want to do that, I can wait for it to get triggered. And as you can see, sell order. So there we go. Just got triggered there. My take profit there. My stop loss is down here. This is on in this case. So, and in this particular scenario, if I want to know what I'm actually risking, $115 to make 75. Not great risk reward ratio. So what I will probably want to do is move that back down and put that to like $30, $45, that up to 90. And what happens? Okay, so that's a 2-to-1 risk reward ratio. And if that moves up, as you can see, that may well move up. I'm covered then, and it will execute those limit orders. Those are all limit orders. It'll execute those limit orders if and when it reaches those levels. You can pretty much find any. Want to do NVIDIA itself. You can find NVIDIA, and you can take the NVIDIA chart, like AMD. Tesla. Right now, we've got fast-moving penny stock, which is Blooms, and that's just moved up quite a bit. It's moved 4% in its current position. It was up at a high of high here. So high of 143. So as you can see, this is quite a good. Do all the technical analysis on there, so you can draw your lines. There, there. You can for you can put indicators on the chart as well. So you put tiles, want to indicate, add an indicator, some Bollinger Bands, moving average. I've got the volume weighted average price on there as well. You can do oscillators. So and what you want to be looking at, RSI, MAC, the various volume profiles. So there's quite a lot of it. There's not every indicator in there. It is somewhat limited in terms of the number of indicators. But all indicators that you should want to take a position for day trade. It really is a nice little platform. You just put a little line on there and put, for example, price channel, regression channel, pitchforks, Fibonacci, Dan lines, Elliott waves, all there available in the diagrams. And you can put the indicators on there as well. You don't have to have candlesticks. For example, if you want to use what else you want. So, for example, line chart, bar chart, histogram, area, whatever. So, most of us will be looking at candlesticks or bar charts, mostly candlesticks. So, as you can see, everything that you need is there. A couple of caveats, though. So I mentioned already the rules that are in place for the challenge, and I will talk you through some of the other caveats that I found out about it, particularly in pre-market. If it's a low volume stock, or bills can be a little bit iffy, so be careful with the bills. Put your limit orders. It's better to use the mouse trading or the order entry panel, so you get filled up whatever you want to get filled up. The limit orders they sometimes get poor fills, and if you do get poor fills, it's worth, depending on how bad it is, it's worth open up a ticket with support, and they will help you. That's with regards to the evaluation. It's a little bit better on the main live account, of course, because you have to fill you at the national best average. So it's a little bit better on the evaluation. The other thing, 8 o'clock we get crazy wick time. 8 o'clock every morning is crazy wick, and you get these algorithmic trading wicks that happen. And depending on the size of those, if you've got a stop loss in place, or if you are in over significant size, it can trigger your max daily loss, or it can trigger your stop loss. Just be careful if you're going to be trading around 8 a.m. My advice is just don't be in a position at between 8 and 8:05. Don't be in a position while those crazy wicks are going on, because it can actually give you a false trigger your stop losses falsely. And that's another thing that I would say on the downside of trading with. However, ups more than outweigh the downs. As I mentioned, no PDT, no locate fees. You don't have to worry about if you want to short something. You can go short on a lot of these penny stocks, even if they're hard to borrow. There's no need to worry about hard to borrow, or the majority of the stocks are available to short, and there's no need to worry about short sale restriction either. Still short them as normal on this platform. But if you're a short bias trader, it really is a fantastic way to get started. What I would say is it's a great way to get started for new traders. And I think I mentioned that earlier. Rather than putting 5K into a small account, the likelihood of high percentage chance of you 5K, take $100 of that 5K, take $300 of that 5K, and buy one of the evaluations. You can get a demo account for 14 days with them for free. Start off with, but take the evaluation. It's going to cost you less. Take the evaluation and blow the evaluation account up than it is to have your own account and blow that up. And you're going to be learning in the process. want to enforce some levels of risk management. Risk management is essential. Don't forget. So, what is my what is my rating on Trade the Pool? I say, right, go check them out. The link in the description if you want to check them out, and try the platform for free if you like the platform. If you've got any questions, want my help with getting set up on the platform, feel free to reach out. What are the other advantages of Trade the Pool? I've got a great, very friendly, and very knowledgeable community on Discord. So doesn't mean that I don't want you guys in my Discord, but members of multiple Discords. Got a great community and help each other. Very helpful community. So that's another thing. They also have their own their own YouTube channel. So go check that out and subscribe to their YouTube channel as well. Everything that I see. A couple of downsides, as I say, the rules are quite stringent for the evaluations, and even on the live account, the 60-second trading sizing up for me, it's very restrictive. So if you're taking a position and you're scaling into a position, this can be a bit of a problem. So the last add that you have, so you take 250 shares, add 200 shares, and then a little bit later you add another 250 shares. If you then see signs of reversal, you've still got to wait 60 seconds from your last add or your last increase on that position before you start taking away. Otherwise, the trade is void. That's the downside. And of course, the 10-second rule, you want to be making 10 seconds on every trade anyway. So my advice, the best way I would see, once the move starts going in your favor, you move your stop up to break even. Always have stops in place, but you move your stop up to break even. Once the trade starts going in your favor, if it gets over that initial 10 cents, it's going in your favor, that's great. Then you're waiting 60 seconds. If it comes back and stops you out, it's not cost you anything. It's a scratch trade. There are fees, there are commissions, but scratch trade. It doesn't really cost you anything. It doesn't impact your overall account too much, other than the negligible in the grand scheme. That's my little bit of what I would say is good working practice in terms of risk management to address that 60-second rule. And once you've got over that 60 seconds, you can actually look for an ad, or you can look for continues to move. You can actually look for it to take profit at that stage, or you can take part off and look for a continuation and keep your stop loss at the remainder at the break even. If you take partial at 10 cents and you can move your stop loss down minus 10 cents. So if it does pull back all the way down to minus 10 cents, it becomes a scratch trade, giving it a little bit of room to work its magic. A scratch trade is no different from a 9-cent trade. So if you 9-cent trade or a 58-second trade, null and void. So scratch trade is exactly the same. It doesn't count. So that's what I would say is a good way to invest in risk management on the program. But if you're limited in your capital, you want to get into trading, Trade the Pool, check them out. I can recommend them. Meantime, I'll see you around. Take it easy, guys.